Now, are you making the pricing mistake that 93% of plumbers, electricians and sub-trades make? Now, if you find that you price your jobs and you think there's a lot of fat in them, but when you actually do the job, there's just not as much money in your bank account as you think there should be, then this is probably the most important piece of information you'll get. Now, when you price your jobs, if you just get all the costs and then slap a 10 or 15 or 20% margin on top and think that's your profit margin, then this is costing you big time. Now, I've got some really important information to share with you, so stay tuned because this will be massive. Now, that mistake is confusing a markup with a gross profit margin. So let's jump in and see how this works. Now, when you do a project, you've got the cost. The cost of actually doing the project, which we call the cost of sales, which is your labour, your materials and any subcontractors that you might use. And let's say we're a plumber and we're doing a small bathroom alteration. The cost is, let's say, $10,000. Then you've got the quote or the charge up price that you give the client, or the sale price. And let's say that's $13,000. Now, to calculate our gross profit, we just take off the sale price, then we take off the cost of sales, and that gives us the gross profit. In this case, it would be $13,000 less $10,000, giving us a gross profit of $3,000. So how does this translate into the markup and the margin? Well, your markup is a formula. It's gross profit divided by cost of sales. In this case, $3,000 divided by $10,000 times 100. And that gives you a percentage of 30%, which is pretty simple. But is that our profit margin? Well, it's not. Our profit margin is actually figured out by understanding the gross margin. And the gross profit margin is this. It's gross profit divided by sales. Now, in this case, that's $3,000 divided by $13,000 times 100, which gives us 23%. Now, 23% is what you get to keep. It's not the 30% we thought we were getting with our markup. And this explains why often when you price jobs, you think there's a lot of fat in them, but when you actually do the job, the money's not there in your bank account. Now, the relationship between markup and margin, it's a mathematical one. Your markup is always going to be higher than your gross margin. So a 30% markup will give you a 23% gross margin. A 43% markup would give you a 30% gross margin. And 100% markup would leave you with a 50% gross margin. Now, the key is to use gross profit margin for pricing, because it can actually completely change the profitability of your business and have a huge impact on the quality of life for you as well. So how to implement gross margin versus markup? Well, the first thing to do is to set a target gross profit margin when you're pricing your work or invoicing your job. Now, for instance, aim 55% plus for your maintenance and servicing work. So make sure you've got a target, and that's what you aim for before you pull the trigger on any quotes or invoices. And the second thing is to back cost all the jobs you do and figure out what gross margin you're actually hitting. Now, once you've done that, you can compare the jobs, you can go back to them and see why they worked out or why they didn't, and make some decisions and changes for next time. As I said, investigate the reasons for those variances and just correct them next time. Now, I've got a free guide called the 3 Steps for Pricing to Make a Profit, which outlines how to price for the right margin so you can make the profits that you deserve. Now, all you need to do is just put your details in and click the button somewhere on this page, and we'll shoot that free guide straight out to you. Now, I really hope you found this helpful, guys. It's massive stuff when you get it right, so make sure you're pricing for the right margins. It'll literally change your business. We'll catch you next time.